Hi, everyone who's joined the call today. We've got about another minute to start officially. Please bear with us while we get going. In case you're wondering while you're waiting, yes, this is the launch of the Philippines Green Infrastructure Investment Opportunities Report. More coming in a few minutes. Okay, ladies and gentlemen, friends, colleagues, commissioners, and various other famous people. Thank you very much for joining us today. This is a webinar, you'll be surprised to know. It's a webinar in these COVID times. Everything is going online. Our carbon footprint is much lower. It's not quite as intimate. I'm not going to be able to shake the hands of Joven Barbosa in this, but I can just simply wave. We hope that the crisis we're experiencing now, the unbelievably brutal pandemic crisis, will abate in the next few months as a vaccine becomes available, as we're able to then do what's necessary to stimulate and grow our economies again, create jobs above all for people. It's been tough times. Of course, the challenge that we face is much greater than simply climate change or environmental. It's how to manage our society sustainably and to create development that will lift the tide for all. We needed jobs anyway, and we need jobs even more so as a result of this crisis. This crisis is, in some ways, related to climate change. It's as a result of pathogens jumping between species from degraded environments. The Intergovernmental Panel of Climate Change, of which the Philippines has been such an important participant and member in the past, has been saying for 30 years we can expect the 21st century to be a century of climate shocks and pandemics. There are likely to be more, folks, unfortunately. So we're going to have to learn from this crisis to figure out what we need to do better to make our societies more resilient in the face of future pandemics and future crises. There will be investments in the health system. We need to understand those not just as health system investments, but as climate resilience investments. This is the sad and tough learning that we take from this year, and all sorts of areas. But above all, to be able to minimize the chance of catastrophic climate shocks going forward. And let's face it, our cyclone strengths are pretty catastrophic as it is, so we don't really want them to get worse. We need to figure out how to inoculate against the worst of climate change. The IPCC tells us that unless we get global emissions down 55% by 2030, we are unlikely to have a sustainable future for our children. We are likely to have an utterly catastrophic future. So we've got a big job to do to have a reasonable sort of future for our children. We will have climate impacts. We will have more severe cyclones, but we need to make sure they're not catastrophic, utterly catastrophic. That's why shifting to green infrastructure, green investment is so important, because this is about managing emissions as well as building resilience into our system, so our systems can bounce back more when we get crises like we've had this last year, or cyclones, unbelievably crazy storms, and so on. So that's the challenge. The good news is that what we have in the world now is capital. So if we want to invest, the capital is there. Hey, it's in the wrong places a lot of the time. It's in Germany, where there are negative interest rate bonds, or in Switzerland or Sweden or Japan. That capital is not going to earn a good return to pay my pension when I retire. I need that capital. The pension funds and insurance companies need that capital to get a return. They're going to get that in places like green infrastructure in the Philippines. That's our opportunity to be able to mobilize global capital for the challenges of creating the kind of future. And the capital is there and it wants green. When we've been issuing green bonds, Commissioner Amatong will talk about what's happened in the Philippines recently. We find that people are very, very keen. We have very clear, large oversubscriptions. In hard currencies, we have price benefit appearing. We have all sorts of things. We have specialist funds being set up. We have the network for greening the financial system, made up of the world's central banks, deciding to look at incentives for green bonds. It's everywhere. So we know if we get the deals going to create a sustainable future for our children, investors will invest. Today, we're launching a report, Green Infrastructure Investment Opportunities Report in the Philippines, which is about identifying the investments to be made in the Philippines, making it clear to our friends around the world in the investment community, making it clear to all actors what are the right things to do, and frankly, where the money should go. We have a pretty exciting panel today. We have first my new friend, if you like, who I've only just getting to know, which is Joven Barbosa, who's the advisor to the Southeast Asia Department, Asian Development Bank, to kick us off. We will have some other speakers coming afterwards. We have Commissioner Ifiro Luis Amatong from the Philippines Securities Exchange Commission, who has been so instrumental in developing the ASEAN Green Bond Guidelines and their application in the Philippines. We've got Paola Alvarez, the Assistant Secretary of the Department of Finance, who has been so instrumental in getting together green infrastructure discussions in the Philippines. We've got Mai Floor, who's the Executive Director of Waterlinks, that will talk about the water infrastructure needs we have. And then we have Ken Xiangnong from the State Street Global Advisors, the world's second largest investor. With so many trillions under management, it's hard to keep a sense of it. Now, they are representing pension funds and insurance funds and others around the world, and they need to make sure that they can pay my pension. He'll talk about the nature of the appetite for these kinds of instruments going forward. And then finally, we'll have Anuj Mehta, who will talk from the ADB's perspective about some of the extraordinary initiatives. Of course, let me not forget my friend, my colleague, my compatriot, Nabila Gunawan from the Climate Bonds Initiative, who will present some details of the report. That's today's lineup. Thank you everyone for being with us. If you want to ask a question, use the Q&A button that you'll see on your Zoom screen. Please do ask questions. I will try and take them up to our panelists as the time goes on. Joven Barbosa, welcome to today. Over to you for some introductory remarks. Please, sir.
Thank you very much, Sean. Hope you can hear me. Good day to everyone. I am very pleased to be with you today to open the launch of the Philippines Green Infrastructure Investment Opportunities Report, or GIIO report. A very timely report developed by the Climate Bonds Initiative in partnership with the Securities and Exchange Commission of the Philippines and the ASEAN Catalytic Green Finance Facility of ADB. Now, as we all know, the Philippines is one of the most vulnerable countries to climate change. The recent massive flooding brought about by the recent typhoon is a testament to that vulnerability. It demands our collective effort then to address these vulnerabilities. We can do more and we must do more, not only at the national level, but also in our regions with local governments and private sector partners. Now, the Build infrastructure program of the Philippine government has the potential to contribute significantly to this agenda. The estimated investment needs of that program is approximately 160 billion US dollar, covering physical connectivity, urban development, transport, traffic systems, clean water, sewage management, water resource management, river basin, and flood control. Now, recently, the list of flagship projects in the Build has, I think, been scaled down, perhaps to reflect financing availability as a result of reallocation of resources due to COVID-19 pandemic response, and perhaps feasibility in some of the proposed projects. The BBB program now consists of 104 big-ticket infrastructure projects worth $84.5 billion. While overall figure has been scaled down, this is still and remains to be a massive infrastructure program for the country, and the potential for green infrastructure here is significant. However, attracting finance to green infrastructure projects has been challenging because of a lack of bankability and low revenue streams. Thus, there is an urgent need to leverage public funds better to catalyze significant volumes of funds for broader private institutional commercial sources to bridge the financing gap. Just this morning at the Philippine Daily Inquirer, I noticed the report that the annual fund to combat climate change, the People's Survival Fund, has been grossly underutilized. This illustrates that point. In addition, a sustainable and resilient response in a post-COVID-19 world cannot underestimate the importance of green infrastructure development. The post-COVID infrastructure investment opportunity is likely to be significant and provides a window of opportunity to push for investments that significantly reduce greenhouse gas emissions, reduce energy intensity, and support restoration of carbon sinks. Now, against this background, the Philippines GIIO report provides an excellent opportunity for the country to strengthen collaboration with our different stakeholders from the private sector, private sponsors, developers, and investors, and MDBs like ADB on the design and financing of bankable green investments and achieving sustained green recovery. In that sense, ADB has been at the forefront in helping countries respond to COVID-19 pandemic and has kept working on improving capacities of its member countries in project sustainability, greenness, and bankability. May I elaborate on 2 points then? First is ADB's rapid COVID-19 response in Southeast Asia. ADB this year approved $5.4 billion to support ASEAN countries on 3 crucial areas. First, supporting healthcare responses. Second, supporting those, the poor and vulnerable, as impacted by the economic hardship. And third, addressing the devastating impacts of COVID-19 on businesses and economies to help countries rebound after the crisis. My second point is ADB's work in developing a pipeline of green and bankable projects in the region. The ADB, through the management of ASEAN Catalytic Green Finance Facility, is actively and successfully supporting ASEAN governments to originate, structure, and source public and private financing for projects that actively contribute to environmental sustainability and climate change goals. My colleague, Anuj Mehta, will provide more details on the work we have done in this sector in his intervention later. Now, let me conclude by acknowledging, as Sean did, our partners on this forum. Assistant Secretary Paula Alvarez, Department of Finance, Mayfloor, Executive Director of Waterlinks, Commissioner Ep Amatong of the Philippine Securities and Exchange Commission, Keng Shang Na, Asia Pacific Head of Fixed Income State Street Global Advisors, Nabila Gunawan, the ASEAN Program Analyst and Lead Researcher for Philippines GIIO Report, and of course my colleague Anuj Mehta, the head of our Green and Innovative Finance Hub and the ASEAN Catalytic Green Finance Facility. And may I especially thank Sean Kidney, the CEO of CBI, for the hard work and commitment to deliver this high-quality report. I look forward to an engaging discussion with you today. Thank you very much. Back to you.
Thank you so much. Thank you so much, Chauvin, for your kind introductory words. We look forward to the partnership, working with ADB to make sure capital flows to Philippines green infrastructure, because that's our mission here. Before we go to the panel, I'd like to ask Nabila to give us some highlights of the report at this particular point. You've got a short PowerPoint, I think, Nabila, but over to you. Tell us the key things in the report.
Okay, thank you, Sean. Echoing what Joven have mentioned, the green infrastructure financing needs is massive in the Philippines, and what to be stressed is the importance of for these infrastructure to be green and attracting capital and finance into this green infrastructure, because as all of us have known, the Philippines is situated in the typhoon belt, Pacific Ring of Fire, making the country very vulnerable to the impacts of climate change. So it's moving forward, it is important not to just roll out massive infrastructure projects, but to also ensure that these infrastructure that are being rolled out are green. So the graph over there just illustrates the massive spending that the government has done towards infrastructure. Next slide, please. Now, we have seen a lot of supportive green finance regulatory framework by the government. These are just a couple of them. There are many more, but these are from the financial institutions. For instance, the Securities and Exchange Commission has been leading the country's work in green finance, not just the country, but also regionally through the ASEAN Capital Markets Forum, ACMF, and serves as the co-chair to the ACMF Sustainable Finance Working Group. And through this role, they have been central to the development of the ASEAN Green Bond Standards, ASEAN Social Bond Standards, ASEAN Roadmap for Sustainable Capital Markets. So we can really see the leadership here from the SEC side. And they have also represented ACMF at the Advisory Council of the Green Bond Principles and Social Bond Principles Executive Committee at the International Capital Markets Association. Domestically, the SEC has introduced developed sustainability reporting guidelines for publicly listed companies, and it aims to help publicly listed companies to assess and manage non-financial performance across economic, environmental, social aspects of their organization. So we can see how they're starting to incorporate these sustainability values into public companies. And then leadership has also been shown by the central bank, BSP. Just very, very recently, in 2020, the Bangko Sentral ng Filipinas is looking to ramp up its sustainable finance framework by encouraging more banks to issue more green, social and sustainability bonds. And it has invested in an additional USD 200 million of green bonds, so making their total green bonds investment up to USD 350 million. The objective of their investment in green bonds is to help central banks to start to incorporate environmental and sustainability objectives into how they manage their reserves. And lastly, from the Department of Finance, I would like to, we actually have Assistant Secretary Paula Alvarez, who will be speaking more about this, but I would like to highlight that the Department of Finance is leading an interministerial green task force. And the goal for these task force is to harmonize different government policies related to green or sustainability and identify how financing can help them, as well as allocating through these task force, try to allocate proper resources to address existing policy and technical gaps. And then from these work arrangement from the task force, one of the work that arises is the Sustainable Finance Roadmap and Sustainable Taxonomy. It is ongoing at the moment. And this is very important because, as we know, globally, we've seen that there is a big emphasis on green definition being harmonized to help, set that out for the investors, for the capital coming in. So it's very encouraging to see this effort by the Philippines. And then moving on, this is just an illustration of the financial instruments and the diversity of the green bonds that has come out of the Philippines. Those are the three green bonds issued in 2020. And then we have in total 13 green bonds starting 2016. And the Philippines issued combination of both financial and non-financial corporate. And all these issuance are from domestic banks and the private sector, supported by multilateral development banks as well. There is no sovereign issuance to date, but we have seen 13 issuance. And the value as at August 2020 is around 2.6 billion of total green bonds issued. In addition to these 13 green bonds, I think it's also important to mention that there are 2 sustainability bonds that have been issued, and which total amounting to 269 million of green and sustainable bonds. The large volume of the green bonds is not only making Philippines a leader, but also not just from the volume, but also because they issued the first green bond in the region in 2016, in which it was climate bonds certified green bond. I would also like to bring into attention the diversity of the currency, as 4 of the domestic banks, the BPI, RCBC, China Bank, and BDO Unibank, issued green bonds in 3 currency, that is in pesos, USD, and Swiss franc. The Swiss franc issuance was particularly noteworthy because it was the first Swiss franc denominated offshore green bond and achieved a negative yield. There has also been repeated issuers such as AC Energy, who a use of proceeds goes to renewable energy.
Nabila, well, I think we'll explore the negative yield question when we're talking with F, which is, you've teased us with that intriguing comment. But take us to specific needs, the renewable energy projects that we need, and an understanding of low carbon transport. I guess we want to know what the opportunities are.
Yes, here we are. All right. So we've talked about green financial instruments. We're going to talk about the project, like what's available, what are the opportunities, and part of our key recommendations in this report is to articulate the existing green pipeline by having common green definition across global markets to allow investor, potential issuers, policymakers to easily identify these projects. And from this report, we looked at 4 different sectors, and we use the taxonomy to identify these projects and asset within this sector that could be considered green. These 4 sectors are, as you can see on the screen, renewable energy, low carbon transport, sustainable water, and sustainable waste management. So we're going to start with the renewable energy. Next, please. All right. So by 2020, as laid out by the National Renewable Energy Plan, the Philippines needs to achieve roughly 15,304 megawatts of installed renewable energy capacity. As an economy that is growing very, very rapidly, between the period of 2015 to 2020, the country's electricity consumption growth by 5.7%, and it outstripped the energy generation growth, which was 5.3%. So at the moment, roughly 52% of these energy is provided by coal, and 75% is imported. But the government recognized the needs for energy security, which is why it rolled out policy to kickstart the renewable energy market in the country. So it introduced a feed-in tariff scheme to deploy renewable energy in the Philippines. And in result, the private sector responded very positively to this. And we see a growth of the market. But as you can see, we need to see more of these growth as the Philippines needs to meet its 2030 renewable energy target. So that's a portrayal of the renewable energy market. Next, please. The other massive opportunities is in the low carbon transport. The Philippines needs to expand its mass transportation infrastructure, primarily to tackle the challenge from air pollution and traffic congestion, mainly in the metropolitan Manila area. So in the metropolitan area, the Philippines faces the challenge of extreme traffic congestion, air pollution, because most private and public utility vehicles largely rely on fossil fuel. In fact, without transition to a cleaner fuel, the transportation sector will account up to 90% of the total energy demand in 2030. So there is really a need to transition to cleaner energy or mass transportation infrastructure like railways. The largest growth we see is in the railways. It is estimated that the railway between 2016 to 2022 the government is planning to expand the railways by 14 times. That's huge growth. 14 times in terms of length. And the cost of the most prominent 4 railways project at the moment ranges between USD 2.03 billions to USD 6.8 billions. Next, let's move to the final 2 sectors that we're going to examine. It is the sustainable waste management. In terms of the types of projects within the sustainable water management sector, we can expect flood control infrastructure projects as well as sanitation. The water insecurity caused by climate change is compounded by increased population growth and urbanization. And in the Philippines, the water supply and sanitation investment needs currently exceed the available funding by 5-fold. That's a lot of funding needs over there. The government aims to achieve 97.46% of basic sanitation and 95.16% access to safe water supply by 2022. So there's a goal to be met there, and funding needs. And then in the sustainable waste management side, the waste sector in the Philippines is actually the 3rd largest contributor to the country's greenhouse gas emission. And a lot of these large waste is driven by urbanization. And the country is estimated to generate roughly 40,000 tons of solid urban waste per day. That amounts to 14.6 million tons annually. So that's a lot of waste that needs to be managed. A lot of these management happens in the local government, the LGUs, so the local government in the Philippines. And at the moment, they're facing challenges in the construction, operation, monitoring of sanitary landfill facilities. So in this, within the LGUs, there needs to be more support from the private sector to construct these waste management facilities. And there's also an increasing interest from the LGUs to develop waste energy facilities. Now, I'm gonna show you 2 examples of, next please, of what these projects look like. But I encourage you to take a look at the report as we go in depth into the access to finance, available financing by domestic banks. But this one is the first project that issued green bonds in the Philippines. So this is the Tiwi Macban Geothermal Complex expansion. And why we identify this as green, it's because it has the potential to reduce Philippines' dependency from fossil fuel energies such as oil and improve the Philippines' energy security. This expansion was funded by Green Bond and is actually supported by the Asian Development Bank. The second example is the, next please. It's from the low carbon transport sector. It is the MRT-11 project, and this involves the construction of an approximately 18-kilometer of metro railway transit system. And it was funded through PPP and the official development assistant. And why we identify this as green is it's an example of ideal green asset because it reduces traffic congestion. It also reduces fossil fuel emission from private vehicles and overall increased efficiency of traveling. This is just kind of a rough identification of the project. Usually there is a more process involved in identifying which project is green, which project is not from the taxonomy. But these are just 2 examples. I would like to, next slide, please. Okay, so these are just yes, Sean?
Sorry, Nabila, let's not go into the quotes, it's a bit too much text. What I'd like to do is to just go back a slide, please, Mariana. Back one more. So just hold on this project. Now, I want to drive home the point of this slide. These are projects that will make it easier for people to get around Manila, that will clean up the air and address climate change. We all know how important it is to be able to get around Manila, which is challenging at the best of times. So the thing about green infrastructure is the climate change aspect for most of us is a secondary aspect. It's a benefit. What we're actually doing is improving the infrastructure of the country. That's really what it's about. Where if we do it the right kind of way, we will also get emissions down. That's the key point about this report. I'd like to actually go to our panel now, if that's okay. I want to specifically welcome Paola Alvarez, who has got this extraordinary job of coordinating the Green Finance Task Force, or Green Task Force, I should say, and the Philippine Sustainable Financial Roadmap and Taxonomy. who has a very deep understanding of what's involved. Paolo, over to you. Paola, I should say, my apologies.
Thank you, Sean, and good afternoon to everyone from our side of the planet. And as you said earlier, Sean, to complement your pension needs, the Philippines is actually a very young population. Hello?
Yes, go ahead. I can hear you beautifully.
Did you hear me? Okay.
Yes.
Okay. So the Philippines is a very quite young population, and our market is actually growing. Pre-pandemic, we were rated BBB plus by rating agencies, and our economy is projected to grow 6% every year. So that was pre-pandemic. But however, even as the pandemic progressed, there are a lot of initiatives put forward by the government to have a green recovery or to help us capitalize green projects. So to elucidate, the reason why the DOF started to have this interagency task force on green finance is because one of the issues that we saw was that intergovernment does not necessarily understand each other in terms of the definitions of what is green and what is sustainable. So in order to make it clear for investors, most especially, we started to coordinate our policies and our regulations. So I think Commissioner Amatong will talk about that later. So initially, what we want to do is to harmonize definitions so that when investors come in and they talk about green projects or sustainable projects, whatever government department they talk to, whether it's the Department of Energy, Public Works, the Securities and Exchange Commission, the central bank, or other banks, all of us would be talking about the same thing. So it would be clear on what could be floated or funded by green bonds or sustainable bonds. So another reason mainstreaming or the recognizes that it has a very heavy mandate in terms of fiscal vulnerable country. We really have to act now to safeguard our generations in the future. So in order to do this, we actually joined numerous international platforms, most especially the Coalition of Finance Ministers for Climate Action. And one of the things that we are championing is Principle 4, which is to mainstream climate change in terms of macroeconomic policies, fiscal policies, and procurement. So aside from this, the president actually designated the Department of Finance Secretary, Carlos Dominguez, as the chairperson of the Climate Change Commission. So this is also a move towards mainstreaming climate change policies and climate change finance policies. And aside from this, the Department of Energy has actually recognized the need for the Philippines to turn to more renewable sources of energy. So the Secretary of Energy just mentioned recently that the Department of Energy has actually set a moratorium on coal. So moving forward, they will no longer approve coal projects or fossil fuel projects as a source of energy. So on our part, as a manager of the finances of the country, we need to do everything to help the Department of Energy to move capital or to move resources to fund these types of infrastructure. And aside from this, recently, our local government leaders have actually stepped up also in terms of creating feasible projects for them to have a more sustainable city. So the pandemic has showed them that moving forward or in the future, sustainable cities is actually the way to go. And for them to do this, they have to mobilize investments in order to create more jobs for the people within their own cities. And recently, the Supreme Court, through the Mandanas ruling, has provided that in the future or in the next year, I think the local government units would have a bigger share in terms of the national budget. So this means that cities could now actually entertain the idea of floating their own municipal green bonds or sustainable bonds. And now they're more open to have PPPs and to fund their own projects in terms of as mentioned in the report, creating more waste to energy facilities. And these move towards more sustainable cities is actually also supported by our legislators. Legislators in both houses of Congress have actually pushed forward for measures and for laws to help incentivize these types of projects. Existing in the Philippines now, we have the Green Jobs Act, which provides incentives for green businesses. It also provides for incentives in capital investments and other green-related incentives. Aside from that, a lot of bills towards waste-to-energy fundings and towards entertaining sustainability, circular economy are also lodged in Congress. So in every part of government, there are actually leaders towards sustainability. And it is actually up to us, the finance department, to coordinate all these initiatives. And that's because we actually are the ones responsible for economic policies and fiscal management. So I think one of the things that we actually need right now is for capital investments to move towards these types of projects. Our local governments are very open to entertain investors. Our legislators have put forward incentives. We've also pushed for the Create Bill, which is a bill that harmonizes incentives for different sectors. So the Philippines is very aware of what it needs to do to be more sustainable. And it recognizes this fact, most especially because we're a highly vulnerable country. We're an archipelago, we're situated in the Pacific Ring of Fire. We experience tropical typhoons every year, around 18 to 20, and the intensity is just getting larger. And not only are we trying to come in or open up our economy to sustainable investments, we're also doing our share in terms of disaster risk management. So the government has also put in place so many layers of protection in terms of government assets. How do we minimize disaster risks? So all these things we're also doing. And we've also done this in harmony with our NDC targets. So in 2021, we'll be submitting our NDC targets to the Paris Agreement, and we will be reporting all of our initiatives during the COP26 meetings in UK, which would be hosted by the UK and Italy. And we're very much active in the Coalition of Finance Ministers to assure that we will actually deliver all these. So for the Philippines, I think that's the gist. And maybe later we could delve into the question and answer more. So back to you, Sean.
Fantastic, Paula. And that little new bit of news about the municipal changes, the prospect of municipal green bonds on a firm foundation in terms of creditworthiness is an incredibly important bit of information for international investors. So let's watch this space. But Mai Floor, who's the executive director of Waterlinks, which is an NGO for everyone on the line, based in Manila, which is promoting sustainable water infrastructure around ASEAN and operating water operator partnerships. Mai, water is a huge part of this area of solutions in all its different facets. Give us some color here. Tell us what the issues are.
Thank you, Sean. Good afternoon. Waterlinks, as you said, is a nonprofit organization based in the Philippines, and we provide capacity building support to water and sanitation utilities across Asia and the Pacific. The core of our program is a twinning partnership called Water Operators Partnerships, which is essentially a twinning program between weak and strong utilities. A program would typically last for a period of 18 or 24 months. Where the mentor utilities assist the mentee utilities in achieving a certain degree of improved efficiencies in operations. We have facilitated over 80 partnerships since 2008. Specific to water supply and sanitation services, in the Philippines, most cities are provided these services by water districts. These water districts cover practically all major cities except those in Metro Manila, which, as you know, have gone on to be given to private operators under concession agreements. These water districts are actually government-owned and controlled corporations. Most of our work is centered in assisting them, and one of the things that they've always needed assistance on is non-revenue water. Since you guys are not really water and sanitation practitioners, allow me to describe a little bit what non-revenue water is. Non-revenue water is basically split into two groups. This would be physical loss or leakage and commercial loss or theft, as well as meter reading and data handling errors. Non-revenue water management is generally considered a climate adaptation practice as it extends the life of existing water supply sources. To give an example, Maynilad, for instance, West concessionaire of Metro Manila, reduced its non-revenue water from 67% in 2007 to 30% in 2016, thus allowing it to extend services to over 3 million more people without having to build a new water supply source. So while the goal is to keep non-revenue water at 20% or less, many of these water districts across the country actually exceed this level. And several or many, a great majority of them hover between 30 to 40% in terms of losses. Some have even higher figures beyond 50%, where in the cases of Iloilo, Cagayan de Oro, Zamboanga City, to name a few, they go beyond 50, if not 60% in terms of water losses. Another area where our twinning program has assisted water districts is on sanitation, which is only now beginning to get traction over the last 5 years. And in terms of coverage, the Philippine Water Supply and Sanitation Master Plan, which was completed early this year, states that only 17% of the country's population has access to septage treatment facilities and only 12% to sewerage services. So the targets prescribed in the Clean Water Act of 2004 for all local government units to have septage management systems and highly urbanized cities to have sewerage systems have not been met. And the deadline for compliance of the Clean Water Act is actually this year, 2020. So clearly there is a need for serious investments in sanitation infrastructure if we are to meet the 2023 targets as per the Philippine Development Plan. And while we do not work on this specific matter, another area that needs to be addressed in terms of water supply and sanitation sector is the matter of over-abstraction of groundwater, as each water district typically build their own water supply sources, and a great majority of these are from groundwater sources. Very few water districts have surface water sources because the cost for these are very high. So the responsibility of water districts, which according to their charter is limited to the city and or province they operate, hinders the possibility of cities to jointly develop water sources. Hence the Bulacan Bulk Water Supply Project, which aims to provide treated bulk supply to 24 cities and municipalities in the province of Bulacan, was spearheaded by the MWSS, the concession owner for both East and West Manila, currently being operated by private concessionaires. Such multi-recipient bulk water supply projects is really needed across the country. This must be replicated, especially in light of the more frequent droughts as a result of climate change. So in terms of investments, it was earlier provided that water supply and sanitation requires around 1.7 trillion in investments to meet the targets set by government for 2030. And the bulk of these investments are needed in Region 4A, which includes Metro Manila, Region 3, Bulacan, Region 7, Cebu, and the Autonomous Region of Muslim Mindanao. And it bears noting that many of the projects identified under the master plan have yet to be structured and tendered. And we are now at 2020, and the first set of targets was set at 2023. So we have 3 years left. So for me, green finance indeed has a role to play in all of these investment requirements, especially if it is able to reduce costs and extend loan periods of traditional financing products. It is emphasized, however, that there is a need to couple any financial intervention with policy support, particularly in the matter of tariffs and performance. While many water districts suffer from low tariffs that cannot sustain required investments to meet annual coverage targets, many also suffer from inefficiencies with very high non-revenue water, as mentioned, and very high staff to connection ratios. The answer to this vicious cycle is appropriate regulation, which is sorely lacking in this sector. While Metro Manila concessionaires have clear performance targets linked to tariff increases, water districts do not. The local water utilities administration, which oversees these water districts, is really not a regulator as per its own charter. What is needed is a Manila-style regulatory office that can uniformly regulate all water districts, just like Metro Manila concessionaires are regulated. It is not to say that the Manila structure is perfect, because it is not. But it is a good start, and it works well for the most part. So I leave it to that, Sean, and I'm happy to hear the rest and take some questions later.
Great comments, my Floor. Thank you so much for that. There's a lot of work to be done, right? And it's very important to note that in this Green Infrastructure Investment Opportunity Report, this is a snapshot of what's there, but there's also a discussion about the sort of things we have to work on. And Mai's given us a great example of an area where there's continual work to be done. It applies to other sectors like transport and so on too. But we have to get the money flowing, we have to get started, and the opportunity is there because government can ensure revenues in these kinds of areas to make this palatable and attractive to the investors who need to be able to pay my pension fund. Always remember that. They've got to pay my pension fund. Commissioner F. Amatong, you've been a driver of green finance regulation for ASEAN Capital Markets Forum regulators, representing the Philippines nobly and effectively in this ASEAN work. And you've overseen the growth of a market in Philippines for these kind of issuance. Tell us a bit more and where you think this is going.
Thank you very much, Sean. As Nabila mentioned, Philippines was among the first, if not the first, to issue a green project bond with the Aboitiz Power Renewables Tiwi Macban bond, green bond, which was certified by CBI. And this was in 2016, before the ASEAN Capital Market Forum came up with the ASEAN Green Bond Standards, which were introduced in 2017 and adopted in the Philippines by the Philippine SEC in 2018. Since we've adopted the ASEAN standards, we've seen an explosion of green social and sustainability bond issuances and investment in the Philippines. So as Nabila also noted, by using the Climate Bonds Initiative taxonomy, there's something like $2.6 billion equivalent of green bonds that have already been issued by 13 or so Philippine issuers. And that's a mix of local currency bonds issued in the local market, as well as offshore US dollar denominated bonds. Now, let me point out three interesting things about this market. We've noticed that it's a very resilient market. So for example, part of that $2.6 billion worth of green bonds that have been issued by Philippine issuers, about $700 million worth was actually issued in 2020. Nabila pointed out the green bond issuances of Arthaland and Manila Water. But after the cutoff of your report, which is the cutoff of August 2020, our Land Bank of the Philippines, which is one of the two state-owned banks, also successfully issued 5 billion pesos worth of green bonds onshore. And our understanding is that AC Energy, one of our large energy companies, is even now in the process of doing an international US dollar denominated green bond issuance. So it's a very resilient market, even within all the difficulties caused by the pandemic. It's a market that continues to thrive. The other interesting thing that I want to point out is that in the Philippine experience, we've seen a broad use of green bonds. So many times when we talk about green bonds or green finance, people almost always automatically equate it with renewable energy. But as Mai has pointed out, there are other possible uses of green bonds, including water. Now, in the Philippine case, we've had renewable energy, Aboitiz Power Renewables, AC Energy, Sindicatum, but we've also had water. We've had Manila Water successfully issue onshore during the pandemic a green bond. And we've also had a successful issuance by a domestic real estate development company for low-cost green housing, Arthaland. So we've had examples of a broad series of use cases in the Philippines, which I think is also interesting. And also, it's not just been a case of large companies. In the Philippines, you have AP, Aboitiz Power Renewables, which is a very large energy firm. AC Energy is a large firm. Manila Water is a large firm. But you also have smaller renewable energy companies like Sindicatum out of Singapore, successfully tapping the bond market for investments in the Philippines. And as I mentioned, you have this medium-sized real estate developer, Arthaland, also successfully tapping the bond market in order to raise funds for energy efficient, low-cost housing. So the range of the potential for green finance to finance a whole range of possible projects. I think we have an initial proof on the ground here in the Philippines of the real potential, the proof of concept, if you will, for green finance and green bonds to finance a whole range of projects. Now, as Assistant Secretary Paola has pointed out, there are a huge amount of infrastructure projects that are lined up here in the Philippines, and you discussed this in the Climate Bonds Initiative report, because we are trying to achieve a green recovery and a transition to a greener economy. So I think there's indications through the capital markets that the finance is beginning to flow, but we need to do more. We need to scale up. We need to widen. It can't just be these limited number of companies. We need to be able to finance a broader set of projects. And I think the work that you're doing by making more people aware about the investment opportunities here in the Philippines, and the work that the ADB is doing to try to support potential issuers of green bonds and support projects such as the important work in the water area that Mai discussed. I think those two things are crucial to scaling up what we can really do through green finance.
Thank you, Commissioner Amatong. And thank you for the work you've done to get this market going already in your role as Commissioner and your role in the Asian Capital Markets Forum. It is amazing, really, the extent of issuance we've seen from what is a small capital market and quickly going to become a large capital market the way we're going. Keng Xiang, thank you for being so patient and waiting for us. Climate Bonds Initiative has a very strong partnership with State Street Global Investors around the world to be able to promote interest in this particular area. Keng Xiang, can you tell us a little bit about State Street first, but about what you see as the nature of appetite, what people need to do, and where you think, from your perspective, this is going?
Right. Thanks, Sean, and good afternoon, everyone. State Street Global Advisors is an asset management company, part of the State Street Corporation. We manage around close to $3 trillion worth of assets globally for all clients, and that includes equity, fixed income, currency, and other assets as well. Now, the ESG investing has been, over the last few years, been one of the core activities of focus for the company. And for us, that's a reflection of our client demand, plus also a reflection of our real corporate objectives itself. Now, we have seen over the years increasing awareness by investors on the importance of the green bond investing, or various kind of ESG related investing. And that has mainly, the initial stage, been driven a lot from the Europe region, EMEA region. And at the same time, within Asia Pacific as well, we have seen some from North Asia and from the Australasia as well. So we can see that the momentum is gathering. And over the years, we have seen investors initially starting from just very pure, simple exclusion approach to investing, to right now targeting specific on green bonds, looking at low carbon, climate related fixed income investing, plus also adaptation strategy. This is a very encouraging sign for us as we continue to engage with the investors, the end client itself, while working together with organizations such as Climate Bond Initiatives, with the issuers, as well as with the market participants at the banks, because this is very key. Apart from just getting the issuance that we talk about, we heard a lot in terms of the potential issuance and as well as the need coming from the issuer side. At the same time, engaging the banks as well to ensure that we as the investors continue to get good liquidity in the secondary market. And we see that over the coming few years, this momentum will further accelerate as we see more and more investors are not just investing in the green bonds or ESG related investments, but they are looking for better report, better governance, because they also need to report to their boards and so on. So I think we can see that the entire ecosystem will continue to grow. And over the coming years, we would expect that this would really be part of the must-have for many investors, not just from the developed countries.
So you said the key words, King Siang, must-have. And I think that's the critical thing that people need to understand, isn't it? That this is really going to a must-have for investors going forward, and that is driving the benefits we see for issuers. If you want access to capital and you can do it in a green format, you are going to get more access to capital. Investor diversification, investor numbers are incredible in this particular space, and that's the key thing here. And as we grow a municipal green bonds market, and Paola talked about the regulatory changes in those areas, it'll be access to capital that's the key issue. So make sure you do it in the green format, you're going to get attention. Or at least if we on this panel have anything to do with it, you're going to get attention. So King Siang, thank you for those comments. Folks, you got a sense of what's in the report. Marina Lopez has published the report, the link to it in the chat function if you want to have a look, or just do a search online. It's available online. There's much detail in there. I kind of now want to just have a bit of a discussion about some of the key points that we've got in terms of questions. So Paola, to you, with this question of the potential for municipal issuance and green issuance, what do you see as the steps to developing creditworthiness against municipalities and their utilities, like water utilities that my floors talked about going forward? What are the challenges and solutions there that the government might be considering supporting and looking for support from? And I do note that Anuj Mehta's photos come on board, and I'm always looking at the ADB to see what kind of support it can provide for us to make this work. But go ahead, Paola.
Okay, so actually one of the things that we've been discussing with local government units is first capacity building. So as Joven Balbosa earlier said, that a reason why the People's Survival Fund is underutilized is because of the lack of bankable projects or the preparation process. So that's one thing that we've been trying to coordinate with them. So development partners such as UN Habitat, ADB, and other bilateral partners are actually coming in to give technical assistance on how local governments can actually package their projects. Now, second, in terms of creditworthiness, we're trying to see how we could use available tools, such as in the People's Survival Fund, the law actually provides that it could also be used as a source for the risks, guaranteeing risks or mitigating risks related to government projects. So aside from that, we also have other government facilities like the Philippine Guarantee Corporations, and we're trying to look at other sources of green finance, like for example, the GCF, the Adaptation Fund, on how do we use funding from these sources to help mitigate the risks that are related to creditworthiness of local government units. So aside from that, we're trying to look into what types of policies or regulations should local governments put in place. Now, although they are very keen and very active, of course, sustainable finance or project finance is something that's not a very easy topic. It's not something that we should expect government, local government leaders, as well as government sanggunians or our local legislative bodies. It's not something that we should expect they already know. So it's something that we want to develop or work with them together. So leaders such as the president of the League of Governors, Governor Kua, is actually very, very interested in how do we enable local government units to attract investments in their own provinces. So in order for us to do this, things such as buffers for their credit worthiness or the risks that they take in. For example, some provinces in Luzon, although they're very business oriented, is located in high typhoon risk areas. So how do we help them mitigate these types of risks aside from their municipal credit worthiness? So these are things that we hope partners like, for example, the ADB and other partners could help us with, because the political will is there. And I think that's the first step for us to actually entice investors to come in and invest in their local government unit. So different steps, a combination of policies from the national government, policies from the local government, and guarantees in terms of risks and credit worthiness should also be looked into for us to help local governments become more fiscally independent and sustainable within their own territories.
That's fantastic news about that work. That is really, we're going to see a lot in this area going forward. Orvin, do you want to make any comment about ADB support for this at the moment? Because I'm trying to get ADB to make a specific comment, of course.
No, I will leave it with Anuj. But
Okay.
I just have to say one thing, Sean. Thank you very much. Asek Paula and Commissioner Ep, I know them personally, and they go beyond the affinity of what they're doing towards local governments. That's what in my head, no? And I'm glad this issue has come back up. We have been struggling with how do we get to our cities, our municipalities, how to support them. But it's the institutional mechanism, the center versus the periphery. That's always seems to be, a kind of a love-hate relationship, I may. But here we are, going forward to this, and I really appreciate the support that we have here. And as ADB, we continue to support. I stop there, Sean.
That's a great point, Orvin. It's a really good point. Anuj will pick up this issue in his concluding remarks when he gives us a really good picture of what ADB is doing. But my floor, in the water area, just going back to your point, you painted a canvas of huge amount of work to be done, and you gave us some very clear points. Where would you start? What kind of projects, if you had to focus on one area, would you be saying people should look at? Give us a bit more flavor.
Well, I would like to say sanitation, because the need is great. And you saw the numbers, 17% access at the moment in the best case scenario. Nationwide is a very low figure. But in terms of a quick bang for the buck, if you will, I would also go with non-revenue water management. Again, I go back to the story of Maynilad that turned itself around. It is one of the more stable and highly profitable companies today. So those two, I would guess, I would say sanitation because of the need, and non-revenue water because it's a quick and easy way to get any utility up to financial independence and sustainability.
King Siang, from your perspective as an investor, what would you be saying to Paula and Mai about how to make sure this can work for your portfolios going forward? You've heard some great messages from Paula about the commitment of the Philippines government to do work. But at the end of the day, this has to be packaged as investments, especially in fixed income that you can invest in, right? Give us a bit of flavor.
Right.
What do you need?
Now, yeah, for us to be enticed, so to speak, to invest into any of the issuers, first of all, we make sure that the green principle is robust, governance, right? So the first thing, it has to be really doing what it says, because our investors would be so-called in trouble as well if they find out a few years that this turned out to be otherwise. So I think a very strong framework, robust framework that ensures that everything is done properly. And the taxonomy that was mentioned earlier is very important. That helps us as well to able to identify. Now, of course, for the issuers which are so-called fairly new to overseas investors, the familiarity of name will require some time. So credit rating is important. And if we talk about some of the credit support program, that would help, especially if the credit rating is lower. And we also need to know, the issuance size, right? So if the issuance size is really small, it makes it difficult because there are certain diversification requirements within our investment mandates. So typical size of, like, if you're talking about US dollar, 300 million, 500 million and above, I think this would be a good start. Anything kind of less than that could be a bit more problematic for us. Now, in terms of the types of projects, if it's a water projects related, that's fine. If it's more of a electricity related, that's fine as well. So basically, any kind of issuance that has got the green or the ESG related, making impact on the environment, that would be something that we are looking for. Now, I would say that at this point in time, what we find is supply of these bonds are less than demand. So this is actually a good news, or perhaps a good problem. So for us, when we are trying to build up a portfolio of diversified exposures, we are actually hoping more issuers will come to the fore to participate in the issuance platform.
I mean, that's an amazing thing to say at the end, everyone. Remember what he said. The problem is supply, not demand. We just need a lot more of these. Commissioner Amatong, this must be amazing for you, given the work you've done to try and grow this, to hear King Siang say that, which is a really, really good news for Philippines issuers, right?
Yes, and we've heard it from other investors as well. There is no doubt that the investor appetite is there and the funds are there. But as King Siang has mentioned, there is a requirement that there is some assurance that the issuers adhere to international best practice, having the bonds certified by Climate Bonds Initiative is one way to do that. Another way is for the bonds to carry the ASEAN Green Social or Sustainability label to show adherence to the ASEAN standards, which are really based on the ICMA Green Bond principles. So these are really signs that there is a strong push on the demand side to look for these projects. And the question that we've always gotten in the past is, where are the projects? And that's why I think this report is such an important one, because for the longest time, the asset managers have been, where are the projects? Where can I invest? And as you said, where can I get a good return out here in Southeast Asia, whereas in other regions, Europe or Japan, I'm getting a negative return on my investment. So this kind of bridging between the investors and the projects that need to be done, but at the same time supported, as both Assistant Secretary Paul has pointed out and Hoven from ADB has implied, supported by risk mitigation mechanisms are very important to allow that flow that you were talking about, Sean, that the flow of that capital, which is available to the projects that we need so badly here in Southeast Asia and here in the Philippines. And again, I think this report is a very good way of illustrating to everyone that the projects also exist and brings us one step closer to funding these projects and providing a return to investors and also securing your pension, Sean, which I know is all very important to you and to all other investors.
As it's important to all of us, right? Sorry, King Siang, one question. Local currency versus hard currency when it comes to international investors' perspective. Do you see increasing appetite for peso issuance, or is it still very much in hard currency?
Well, I guess you're just talking about the Philippine local currency bond versus hard currency. I would say that at this point in time, the majority of interest would be in the hard currency or more the US dollar or developed currencies. So in terms of peso, I would say on balance as of now, the demand is not that strong. But one thing to note is that the trend of emerging market local currency bonds investing is increasing. So this is something important space to watch, right? I think for the issuers themselves, like if it's a Philippine issuer, the natural currency is Philippine peso. But I guess, issuing in dollar, they have to do the currency hedging from the side. But I think what I'm saying is that as of now, perhaps it's more of the developed currencies issuance that would be more in demand. But the local currency space is gathering more pace as of now.
A question back to you, Commissioner Amatong, which just check this about the green credentials, because you've had a question in the panel about this. How comfortable are you that the oversight and reporting regime under the green bond guidelines the Commission put out are strong enough? Do they need more work at the moment? In other words, are we all going to be comfortable investing in green bonds in the Philippines and be sure that they're going to stay green? And noting that King Siang says this is a critically important factor for investors.
No, yes, and that is a major concern of the SEC, and that's one of the things that we look at to ensure not only to provide access to financing to local issuers, but also to assure our investors that the bonds are what they purport to be, and the use of proceeds are indeed what are indicated in the bonds. And I think the biggest proof of that is that many of the issuers have already started to report, and the quality of reporting. Well, it's better not for the regulator to say, but maybe for the investors to say. But the quality of reporting seems to be quite good because it goes into not only use of proceeds but potential impact of the proceeds. If you've seen some of the reports issued by Rizal Commercial Banking Corporation, one of our private banks that have issued green bonds, they complied immediately with the reportorial requirements. And the other thing that we see as being a good indicator that issues are being good corporate citizens, and they are they're not just paying lip service to green finance, they are truly committed to this transition, is that you have repeat issuances coming from key issuers, which continue to receive a lot of demand from investors. So if investors are receiving the returns that they expect and the quality of reporting that is going out is satisfactory to the investors, I think we're headed in the right direction. But definitely that's something that not only the Philippines but ASEAN is very concerned about to assure the integrity of the ASEAN label and the ASEAN standards.
So Paula, in your role as Assistant Secretary of Finance, have you heard anything new today to change, or is this something really that the Ministry of Finance is well and truly tackling? This promotion of green infrastructure.
Actually, yes. One of the things that the Department of Finance is promoting is how do we have a sustainable green recovery? And at the same time, how do we create fiscal space at a time of a pandemic? So to put it into context, the Philippines is undergoing the pandemic, and we're very fiscally, we don't have enough fiscal space to provide enough resources to combat the pandemic, but we're trying. Aside from that, we've experienced just last month 3 super typhoons, and we're projected to face 3 more until December, and that's a lot of typhoons. So how do we create fiscal space while at the same time providing jobs, a healthier environment, and providing a better quality of life for our citizens? So I think this is why the push for infrastructure, that's why we have the BBB, or Build, Build, Build program, the flagship program of the Duterte administration, is to actually invest up to 9% of our GDP towards infrastructure. So this was a good signal at the beginning of 2016. But then right now, the move of the Department of Finance is towards providing sustainable finance or promoting green finance. As a matter of fact, it's not only the Department of Finance, but the Banco Central as well. If you would look at the regulations and the issuances of the central bank, they've actually issued a lot in terms of promoting sustainability, like sustainable finance framework for banks, and how do we convert the agri-agri law to also accommodate loans towards green investments or green projects. So in terms of the policies that the government has been issuing and the statements issued by each of the secretaries, especially, for example, the Secretary of Energy to impose a moratorium on coal and to actually increase investments towards renewable energy, is a good sign, and that it is a sign that the Philippines is actually geared towards promoting investments towards sustainability and resilience. So this is one of the main thrusts of the government now, is to actually make the Philippines greener and more sustainable so that we could ensure a better quality of life for the future generations who will be paying your pensions. So I think this is a whole circular economy that we want to promote in the Philippines, and infrastructure and investments is the key. And right now, sustainable finance or green finance is actually what we want to mainstream. And we're happy to have more engagements. We're happy to have more technical assistance towards local governments in order to promote these types of investments.
Thank you, Paola, and thank you for bringing it back to my pension or our pension. This is about a marriage between institutional capital that does need to pay all our pensions and the kind of investments that will create a future for our children, bringing the two together. This is fundamentally what it's about. We need to wrap up. Unfortunately, I've let things go over time. I'm so excited by this topic. I need to invite my friends Anuj Mehta from the Asian Development Bank, who's the unit head of the Green and Innovative Finance and the ASEAN Catalyst facility. He's going to tell us a little bit more about all of that. Anuj, over to you.
Thanks very much, Sean. I hope you can see the slides. I will try not to go into too much detail on the slides. It's great to be here. It's great to have supported CBI and of course F in developing the report for the Philippines. Thanks to Paula and thanks so much to F and to Mai for being here. From my side, I want to sort of give a little bit of and sort of an overview in terms of what we are trying to do at the ADB to support many of the things that ASEC Paula was talking about, Commissioner F was talking about just before me. Three things I really want to focus on with just one line, which I hope is a takeaway, which is finance at scale for green. And there's a lot of discussion about green projects, and a lot of my colleagues are working on that across the bank. We have a great target for climate change led by my colleague Preeti Bhandari. So the bank is making a lot of efforts on climate. The issue is the scale of the need and how do we catalyze that? And that's basically what we're focusing on. I won't go into a lot of the backdrop in terms of what's happening, except for this one number, 3.2 degrees. And I think there's been a lot of focus recently by the UN about where we are actually headed, which is not good. And with this sort of track, a lot of countries need to do a lot more very, very urgently. So it can't be projects, it has to be portfolios. And unfortunately, the issue is compounded by COVID. I think it's worth talking about that for a second. With the economies, affected across the region and across the world. I mean, I think the first time in 6 decades that the economies are going negative. I think 0.7% for Asia and 3.8% negative for Southeast Asia. And that has a major issue on this. And, for me, everything comes back to scale, which is why I repeat it again and again. The scale of the need is so high that one can't talk about individual projects anymore. And if you just look at Southeast Asia, the need before COVID hit was something like around 157 billion per annum for climate adjusted infrastructure. And the gap, which is on the right-hand side there, 102. So you've got 50-60% financing gap before COVID hit. As Paula very rightly said, government's fiscal space is constrained because of the pandemic even more. Tax revenues are down, expenditures for emergency reliefs are up. So this financing gap is higher than the 459 billion across Asia. And that's basically coming straight back to Keng Siang's problem issue, which is there are funds. How do you bring those funds which are needed clearly to projects? And this is what we need to be aiming at, which is the large amount of money sitting in the pension and insurance funds, projected to reach 60 trillion. How do we catalyze that to our region? And for that, basically, we've got, the whole focus within my team, which I report to Hoven, who's on the call over here, for developing a green finance focus for Southeast Asia. So we have an innovation hub. Within the innovation hub, green and innovative finance is our mantra, our mission, to try and catalyze green finance, which is climate plus. So climate indicators plus environment indicators. And clearly there's a demand. Your own statistic, Sean, from CBI shows that there's been a record year in terms of bonds last year, but it's still a minute percentage of the global need. So how do you catalyze a lot of green finance into the market? Now, I'll talk about this in a second, but this year we basically brought out a look at the green recovery plans which are being put in place across the world. And that includes, of course, our countries, the Philippines, Indonesia, and alongside this investment principles for the ACGF. So we are trying to bring a focus on green recovery through ACGF in these ways. So how are we trying to catalyze green finance? So projects, we are certainly working on projects, but the scale is the issue. De-risking, and I think if there's one thing that I want anybody to take away from this, is public sector funds need to be used for de-risking 1 to 6, 1 to 9 times, so that each dollar of public sector money can catalyze a multiple of funds from places like State Street and Bloomberg and so many other entities. But how do you get them? To do that, you need these national de-risking vehicles, catalytic vehicles, which take the risk away from projects which are considered risky. And that applies to a lot of the sectors which are not getting the funds in. So de-risking vehicles, I think, is number one. I think that's a big focus for our work. Thematic approaches where we are saying, let's focus on a region, or for example, blue oceans and plastics is a big area that we're looking at now, or off-grid solar or floating solar, and capital markets. For me, those are the 3 big areas that we've been pushing. And there are things which are happening. So, it's really great to see the work which has happened recently with bonds. Commissioner Amatong spoke about the Philippines. Let me talk a little bit about the Thailand effort that my team has been working on. So we've been supporting Thailand in developing the first post-COVID recovery bonds. And this is the first sustainability bond issued. It was over 3 times subscribed. And they've got very clear frameworks, very clear use of money. There was another one which we supported with the NHA, the National Housing Authority, doing a social bond. And there's another 3 which are being structured in Indonesia as well as Thailand, which the team is working on. So what are we doing there? We are supporting and making sure that the frameworks, sustainability, transition, green or social, are per global norms. We are trying to bring in certification from yourself, Sean. You're part of this work in Thailand. And we're trying to also do the downstream stuff, help in selecting projects and make sure that the impacts are met. Projects, we've been working on Cambodia Solar, attractive, the lowest bid last year, but that was a project. What are we doing? We're trying to scale it up into a program called Ashore for all of Southeast Asia. We are pitching and saying we will help develop these floating solar battery storage projects, and we've got 2 or 3 more which are now being developed with our TA money to scope and develop this. This could equally happen for projects such as ASEC Paula was mentioning on the city level, or waste projects in the Philippines. And then this, which is of course, the my life work at the moment, which is the ACGF. Now, the ACGF is worth dwelling on because it is one of the few, if not the only, regionally owned green vehicles in the world, owned by all of the ASEAN countries. So it's owned by Indonesia, Philippines, Thailand, Malaysia, Singapore, Brunei, Cambodia, Laos, Myanmar, and the ADB, and we administer it. About a year ago, under the ASEAN Infrastructure Fund, this facility was set up, and we were surprised by the amount of support it got. So it's got about $1.4 billion in commitment from a lot of the development partners, 13 partners. And its approach is integrating this mixture of trying to develop projects, structure them, bankability, all of that, and also providing de-risking funds. So provide funding concessional for a short period, get it over its risk, and then catalyze private capital. And in the 1 year since we operationalized, there are already, in fact, now that pipeline is 22, there are 4 projects with very strong green impacts, which have been approved by the board of AIF, the ASEAN Infra Fund, which is the parent for this. And we continue to work on this. There are, the work that is actually happening is staggering. In fact, we are trying to expand our team to cater to the amount of demand we have. Now, interestingly, for green recovery, we are working with the Green Climate Fund and with the government of the UK and Italy to create a green recovery window, which will expand on this work that we're doing, also making green jobs a part of the indicators for green finance that we already have. And that hopefully will happen by Q2 next year. It's quite an advanced stage, but this vehicle is really the fulcrum for supporting countries do the capacity building, do the project development, create the de-risking vehicles, and then hopefully get these projects coming out at scale. The last thing I'd sort of want to mention is, there are also great things happening at country levels. We've been speaking, of course, with the Philippines and developing this really great product, which has been launched today. List of projects, list of sectors where things can happen on green, where we can support further. Indonesia, you'll see on the screen, they're developing a de-risking facility at the national level. This can be replicated. We've had discussions in the Philippines for a de-risking vehicle over here, and hopefully that will move forward. And then, there are other concepts which need to be developed further. So we've launched a book about a month or 2 ago, which is called Green Finance Strategies for Recovery in Southeast Asia. And in that, we talk about 2 or 3 mechanisms which I think need to be brought in. Credits, blue credits, which is specifically for oceans and pollution, very important in our region, and securitization. How do we bring in more sophisticated mechanisms? And government really has to be there as a guarantor of such vehicles so that projects can be built at scale. I think I'll stop over there, Sean, probably with just the one line that my team, Hoven's team, we are all here to support the government's Philippines, that's a host country, develop the capacities and the projects and these sophisticated instruments, which can really scale up, not just the projects, but also access to markets so that green and sustainable bonds become a much larger share in ASEAN of the global total. I'll stop over there, Sean, and hand back to you. Thank you.
Thank you. Remember what he said, technical assistance available from the Asian Development Bank. There is capacity development work to be done. We understand that. There is a need to support people like the Islamic Development Bank that was asking questions in the chat function about how to finance these things better. The Asian Development Bank is providing technical assistance. They're being a bridge between the projects, what the government wants to see happen, and what the investors need to be able to put in their portfolios to pay my pension and Commissioner Amatong's pension as well, of course. So that's the background to it. Thank you so much, Anuj, for that. If you're out there and you're wondering, is your project green? Is your investment green? This report will help you. The Green Infrastructure Investment Opportunities Report, you can find the link in the chat function and it's online, will give you guidance. It includes a taxonomy, which is essentially a shopping list for what is green. Call it a shopping list for our futures. It exists there, and there's work happening in many jurisdictions to provide more guidance, to make it easier for people to understand what are the right investments to make, and also to ensure that those investments, the reporting, the transparency of those investments provide confidence to King Siang, to Commissioner Amatong, to me, that the investments really are green, which is what I need. I want my pension, you want your pension, to be able to not only give a return, but to help improve the planet in ways that are really material. That's, of course, the opportunity. The green bond market shows it works. It works. It's $1 trillion market now. If you're an issuer, you will get access to capital, assuming you meet minimum requirements. You heard King Siang talking about that earlier. You will get deeper relationships. Now, this is the real gold dust. The investors are keen enough to come back to you and to talk to you and want to know more. And that makes life so much easier for the investment, the next one, the next one, the next one. and this will be very important for municipalities in the area. This particular webinar is being recorded. It will be available as a webinar recording to share with your friends. We might even make it as a podcast. We're working on that. So keep an eye out. climatebonds.net/webinars will give you the details. Thank you everyone for joining me today. Thank you especially to Joven Barbosa from the Asian Development Bank for kicking us off, to Commissioner Amatong from the Philippine Securities Commissioner, Green Finance Pioneer of ASEAN, to Assistant Secretary Alvarez from the Department of Finance, and most importantly, bringing together the Green Task Force for the Philippines, helping support that project. To my floor, Executive Director of Waterlinks, doing so much work to improve the quality and the capacity of our water and our sanitation systems. To Keng Siang Nung from the State Street Global Advisors, who is managing our pension fund money and doing it sustainably and giving us a clue about what we've got to do. To Anuj Mehta from the Asian Development Bank, who is developing these specialist funds, these specialist solutions. And to Nabila Gunawan, my colleague, who has helped create this report, who presented earlier. Thank you, Nabila, for all your work in creating this. Folks, there's a job to be done. We have no time to sit in our laurels. We have to create a clean, green, sustainable Philippines that will be a better place to survive the typhoons and the climate shocks we're getting. That's the job. We don't have time to walk, we have to run. You've heard today, there is appetite, there is interest, there is enthusiasm. Help us, please, create this future that we know we need for our children. Thank you everyone for joining me today. Thank you to our speakers. Best of luck. Let's convene again next year for progress. Paolo, I hope that's the case. Thank you, everyone.
Thank you,
everyone.
thank you, everyone.
Bye-bye.